Hi guys, thanks for joining. Start the recording as well. Okay, good to see you all. How's things going? Just adjust. Yeah. Our audio and video clear? All okay? You all can hear me, see the screen recording, screen share. All of that is done. Yes. Can someone confirm? Can you guys hear me? Audio, video, all clear? You can start. Okay, cool. Right. So let's get to it right away. What we have to do today is a recap of the chapter 10. Let's go through the most important points, give you a reminder of how to do, those past, like the questions that come, the different type of questions that have come so far. Let's do a quick analysis of the past paper questions as well. And I think we should discuss some MCQs. That's one of those things I haven't couldn't do it for you guys yet for partnerships. So let's do that today. Sure. I'll show you how to, what are those, shortcuts, what are those quick things you can do when it comes to the MCQs to get those correct when it comes to past papers. Okay. When it comes to the partnership. So I think in terms of the overall syllabuses, we'll start off with a recap of chapter 10. There is tonight, and if we need another class, we will do another one as well. And then we will move on to a recap of chapter 8 once again, because those are things I haven't uploaded VODs also. So it will be helpful for you guys to have a recap of those two. And then we will move on to a recap of chapter 4 and 1 and 2 if possible. Those are the sections we are yet to do a VOD on. So you guys can use that. And then if you all need, we can do a one last sum up of company accounts and management accounts also. If you need, we can do that. Okay. Fine. So let's start off with the C10. Now for C10, I guess I hadn't provided a printed tune for you all, but I think most of the like the important stuff that I gave you guys, I had asked you all to write it down in the writing book back then. So ideally, those important notes you should have in your book. If you don't have it, I have a tune for it now, actually. But obviously, it'll take a while by the time you all get it couriered. So what I'll be doing is in the classroom, under the students and notes, it says students. No? So for C10, C10 is here. I will replace this C10 that is already there with the tube I'm going to show you now because I've added some stuff to it. So you can just, I'll allow to download also. You can download the C10 and print it. So there's an updated version of this tube in a more nice way. I mean, the same thing, I guess. To be honest, it's the same thing. I just have put it in, tables and stuff. Yeah, but it's the same thing. So to be honest, then you don't have to. Anyways, I will upload the new thing and I will anyways, you know, keep it downloadable so that you all can print it. Okay. Yeah, if you're coming for this week's the Sundays seminar, I'll give you all the printed version. You all can come and collect it. Or if you are coming that way to the academy, collect it or just get it printed. In the day, it's just the PDF is already there, so no issues. Whichever way works for you guys, you all can do that. Okay. Okay, cool. So I will upload that. I think everything else is uploaded so far. That is okay. So this is the updated version of that dude. It's the same thing, but I have put it in, tables and made a nice structure for it. Let's quickly recap the most important parts of the partnerships and then let's move to discussing questions. Guys, partnership used to be a compulsory question back in the day. Okay, let's quickly take a look at how this has evolved over the, last few years in terms of the past papers, and then we'll come back to this. So if you take a look at the last, I don't know, entire from 2008, 9 and all, if you take, right, this is how past papers analysis is. If you all want, you all can take a screenshot of this as well. So, you know, like now 2019 onwards is the new syllabus. Okay. So far 19, 20, 21, 22, 23, 24, like around 5 papers to 6 papers have come from the new syllabus. This new syllabus will continue until 2030. 2031 only the new syllabus, the next new syllabus will come. So until that, this structure is valid. Okay. Maybe they're making changes now. If you take a look at those in the past, right? Partnership has come always as question 2. In the old syllabus, it used to come as question 2. But now you all know question 2 is management accounting. Question 1 is company accounts. Question 2 is management accounting. Those are the 2 compulsory. Partnership is not compulsory anymore. So technically, if you really don't like this topic, you can skip it if you want to, because it comes as an optional question as far as the new syllabus, the current syllabus is concerned. But I would say that if you can practice a bit more, especially on the past papers, you will be able to handle it. It's actually not hard, especially the MCQs also. There's a specific set of method to follow. You just have to follow that. And then the more and more you do the questions, you will become comfortable with it. But it's all in the hands of doing those questions. You just have to do back to back all the MCQ questions from 2016 to 24, and then do the past papers at least for the last 5 years. If you do back to back, you will be thorough with it. That's all you need, to be honest, to be able to tackle your question that's going to come. But let's see. So this is how it has been. I'll come back to this admission at the end, retirement at the end. You all technically know what this means, but let's quickly revise and then come back to that. To be honest, I think in the last 10 years, probably the hardest one that was tested was 2015, probably, or maybe 2016, but everything else has actually been very straightforward, even the MCQs, but we'll come to that. Okay. Anyways, so like I said, it has come as an optional question now. And if you want, you can skip it as far as paper 2 is concerned. But MCQs, you can't skip. So that is what we have to focus and somehow cover as much as possible today. So let's quickly go through what a partnership is and all of the characteristics and things like that. Now, what you need to remember from the theory perspective is, okay, partnership, I mean, it's basically 20 members, maximum of 20 members, minimum of 2 members. That's how it goes as far as the partnership is concerned, right? There are main characteristics. There has to be individuals, there has to be an agreement, it has to be a business, profit-making business. And there are some ordinances or acts that are related to it. The most important out of these 2 is the Partnership Act of 1890 and the Companies Act number 7 of 2007. These are the 2 most important things. The other 2, of course, don't get tested. So I've just highlighted it. I will upload it. And then obviously there are, you have to have a written agreement for partnerships. If you can have a verbal or an action-based partnership, but whatever comes in court that is valid is the written one, because people can lie. So technically, written is compulsory now. And these are the conditions that have to be included. Now, in terms of the most important part, which most of the time gets tested in the MCQs, is this one. Section 24, Section 42, and then as per the Companies Act, maximum number of partners in a business is limited to 20. That, of course, I mean, depends, doesn't always come. But these 2, of course, always comes. It comes as a true or false thing, or maybe even 1 in 5 choices scale. MCQ, it will come. What is this now? According to the Section 24 of the Partnership Ordinance, you have to remember these points, saying profit or losses must be shared equally. Now, technically, what this says is, if the 2 partners didn't have a written agreement, yes, then let's say they had a written agreement and they decided, okay, I will put 5 million capital, you put 4 million capital, we will split profit as 60-40 or something like that, right? And then you will get a salary. There'll be a salary given to the partners. interest on capital is given to the partners. If there is already an agreement, then no problem. But if there is no agreement and the partners come to court because of because they didn't have an agreement and now there's a disagreement between them, section 24 comes into play, which is profit or losses, regardless of whether I gave 5 million, you gave 2 million, doesn't matter. Profits have to be shared equally. You didn't have an agreement, no, now screw you. Section 24 says no agreement, none, follow this. Partners losses, profits losses has to be shared equally. Partners are not entitled to receive a salary. If you have an agreement, fine. If not, no. Partners are not entitled to receive an interest on capital also. But if there is any loan that the partners have given, 5% is the minimum annual interest. And if I have paid, if I'm a partner and I have paid any business expenses from my money, let's say I am the one who paid the business, the electricity cost, my money. That's like capital at the end of the day. Those have to be reimbursed if there are any expenses like that, or it has to be counted as capital. So section 24 says these things. Very common MCQ question. Okay, you'll have to by heart this, can't help. But then the more and more you do questions, you don't have to by heart. It will automatically stay in your mind. Ilangata section 42 says, in addition to whatever section 24 has there, after a partner retires, leaves or dies, okay, basically if a partner retires, we have to give him whatever he has given us so far. If we can't give that, on the same day we have to give it and settle. If we can't give that, we have to consider that as a loan and give a 5% minimum annual interest. These two you have to remember. These get tested. This is an easy question if in the MCQs, as long as you remember this part. So I'm going to put a red color box around it and keep it. Okay. When we are doing MCQ questions, you all will see this. Fine. Now we move on to the rest of the stuff. So obviously, if you take a look at the partners, if you'll remember, there are 4 main ways in which partners can contribute towards the business. They can either give capital. If they're giving capital, we have to give them interest on the capital. As per the agreement. If the agreement doesn't have, then we are not giving. Participation in management, if they are managing and things like that, that will come as partner salary. Bearing risk is why we give the profit. Providing loans is basically interest on partner loan. Now remember very carefully, there's another common MCQ question that can come as well, which is these 3 if you take, interest on partner capital, partner salary, and the share of profit. All 3 of these are, okay, given from the net profit of the business, if you remember correctly. If you remember what we have done before, right? All 3 of these get divided from the net profit of the business. We call it as appropriation. Right? We appropriation from net profit. So that means now there are some kind of MCQ questions, primarily, even paper 2 questions can come, where they ask you to find, okay, net profit of the business. Remember what I'm telling you now when we are discussing those questions is very important. They will ask you to find what is the net profit of the business. If they ask you to find net profit of the business, don't forget all these 3 is basically what that net profit means, end of the day. It's not just the share of profit, that's the net profit. Because end of the day, we are doing taking the net profit of that partnership business and we are splitting it. We are deducting interest on partner capital also from the net profit only. And we are deducting partner salary also from the net profit only. Right? So this is after the net profits, these 3. Whereas interest on partner loan, end of the day, loan is a liability, no. That has to be considered as an expense. That difference you have to remember. This is a very common MCQ question, right? At the end of the day, MCQs can get tested only from a specific set of things, right? This is one of those things because sometimes students go wrong here when we are discussing the questions. You will see. So this has to come expense, which means it has to come before net profit. So I'm just adding these 2 here. If you all can download the tube, print it, you can add it there. So this is the expense that will come before the net profit. This is appropriation from the net profit. After the net profit only, this will come. within brackets that. Okay, fine. So that's that. After that, you have your got it, right. After that, you have your current account, capital account. Always remember when we are talking about equity of a business, equity of the partners, we have to add the capital account and the current account both. We'll take a look at a few examples as a reminder. You all know how to do that. But what are the things that come in the capital account? Mainly O plus good important things on red, because this was not there in the printed version. So goodwill, getting that. Plus in the current account, of course, everything that is on a continuous daily basis is what comes in the current account. Basically, interest on capital, partner salaries, share of profit, drawings, and interest for loans provided. Any of the loans that we have to pay back to these guys, plus the business expenses. Any business expenses that the partner has given, that can also be considered as a short-term capital, basically, not as a capital, but you have to put that into the partner's account, right? Okay. So these are the things that are there. Now, in these, obviously, the current account. Now, current account is a what kind of account that we are talking about? As a reminder, let's quickly take a look at it. Capital account gattot, it is also an equity account. Current account gattot, it is also an equity account, right? So all of these things, interest on capital, partner salaries, share of profit, these are all things that increase a partner's, those are all belonging to the partner end of the day. So these all should increase equity, because just like how net profit increases equity, all of these things belong to the partner. So these things should increase equity, which means all of these things should come onto the credit side. Everything, interest on capital, partner salaries, right? Share of profit. These are all on the credit side. Only thing that's on the debit side primarily is drawings. Drawings should come on the debit side, because those are things that reduce the partner's capital. So current account, okay, drawings should come on the left side. When we do these questions, you can take a look at it, right? And then interest for loans provided. Now, this, of course, if the partner has given a loan, right, then obviously partner is the one who has to get that. So then that also has to go on the credit side. But be careful, sometimes business might give a loan to the partner. There are those kind of questions. If that is the case, then you have to be a bit careful as to what loan this is and what interest this is, because the partner only then has to pay back the interest. If he doesn't pay it, we will deduct it from the current account, which means debit. So be careful on the interests. Business expenses borne by the partners. Once again, if the partner has given us money, he has paid the business expense, we have to credit it once again, because it belongs to the partner. That money belongs to the partner, right? So think about it that way. Right. Next, moving on to, so these are current capital account items, and then these are current account items. Okay. Next, moving on to the statement of profit or loss or appropriation. Right. Now, we'll take a quick look at some of the questions. We are supposed to do an income statement. You all remember, we have to first calculate the net profit of the business. Okay. And then after that, right, we are supposed to do an appropriation. We have to split it between interest on capital, partner salary, share of profit or loss. We split it. And finally, that net profit has to be divided among these three partners. That's the first one. And then after that, right, we also have to do a statement of financial position, right? Where the most important part that comes is under the equity account, capital and current both have to be shown. And then the loans, if it is a loan that business gave to the partner, it has to come as an asset. But if it is a loan that was obtained from partner to the business, then has to come as a liability. So we'll record those as well. But let's take a look at. I've in this version, I have included that income statements full version once again. This was already there in chapter 6. Chapter 6 tilt, I guess, but you can have it as well. Now we are going to move into the last and most important part here, where paper 2 obviously and MCQ also comes on this. There are three things that can change good. See, this is also a very important thing, by the way. There are three instances where ownership of a partnership business can change. One is whenever a new partner comes in, or whenever a partner retires, or whenever there is a change in the profit sharing ratio also. End of the day. All these three are relevant for goodwill calculation. Now, this also sometimes, can come as an MCQ question. Sometimes it has come, right? It's not just admission or retirement. Changes in profit sharing ratio is also relevant when it comes to instances when the ownership of a partnership business changes. That's why I've highlighted it and kept. That's also important. I will put it as instances where ownership changes, and then within brackets, I will say relevant for goodwill. So these are all instances where you have to remember. Space. Okay. All right. Now we'll move to the couple of example questions, and then we will move to doing, some other MCQ questions after that. Let's see what is the trend of questions that have come and how to tackle that. Okay. So there can be admission of a partner at the beginning of the year, where at the 1st of January 2024, he would have left or he would have joined. Two ways in which to do that. And then at the end of the financial year, either he would have left or he would have joined. Those are the four things that have come. And as you can see, if I go back to the trend analysis that is there, that is this, right? The paper 2 questions that have come so far. New syllabus so far has always tested either admission at the end of the year or retirement at the end of the year. That is what so far has come in the new syllabus. I have to put 2024s also to this. Past syllabus, of course, from the 2011 to 2018 papers, that syllabus, of course, mainly they had focused on admission at the beginning, right? And some of the retirement at the beginning questions also were there. And in 2015, there was a completely new question where bank account also was combined and given. Now, in this syllabus, they still haven't given something like that. But let's see. Let's take a look at those questions also just to be safe. But most of the time, if these questions come, it's not a big deal. It's basically you have to follow the same process to do it. Okay, fine. So moving back to the example questions. Now, these are example questions that we did in class. One more thing is goodwill calculate karana kota. This is what you need to remember, right? Capital accounts of all partners based on new partnership ratio has to be debited and old ratio has to be credited. This is something I told when we were doing partnerships as well. Now, when we are doing the questions also, we will follow the same. But this is also something you have to remember. Right? The logic behind this is a lot of other things. But right now, for now, focus on this part where we are saying if goodwill has to be split based on the new ratio, it has to be debited, and old ratio, it has to be credited. You have to remember that. That's also the most important thing that comes. Other than that, theoretically, there's nothing else major for us to go through. Okay. So I have summarized the theory part. Let's do the questions. Then that will make more sense. Now, these example questions we've already done. So I'm not gonna. These are things you should ideally know now. If not, you go through. I will upload the answers for this also to the classroom. For those of you who may have not been in the class at that time, I will upload it. But for now, we'll focus on the 4 types of questions. Let me quickly summarize what the 4 types of questions are. Right? So question number 1. The question type 1 is where admission of a partner happens at the beginning of the financial year. Partner joins on the 1st of January. So look at this. Ranga and Taranga have been doing a business. They are sharing profits and losses ratio in the ratio of 2:1, respectively. Following provisions are included in their partnership agreement. So, Ranga and Taranga getting a monthly salary. They're also getting interest on capital balances at 10% per annum. And then on the 1st of April 2016, Saranga also comes in as a partner. Earlier, the ratio was 2:1. Now the ratio is 2:1:1. There's a new ratio that's coming in. And obviously, whenever a new partner comes in or a partner retires or a change in the profit ratio happens, what should we do? We have to calculate goodwill. So they have already calculated goodwill and said it's 900,000. And anyways, in your syllabus, we adjust it to the capital accounts. We don't do anything else. Okay. Now, right, we are going to look at how to do this very quickly. Whenever a partner joins at the beginning of the year, you need to first take the logic into the head. He's always think of it in terms of the timeline if you want, right? From the 1st of the year to the last. So let's say 31st of December was the last, 1st of Jan, right? If he is joining at the beginning of the year, that means whatever that is relevant for this year in terms of the net profit, he also should get. So we should include him in the divisibility of the profits. Because end of the day, he has been there with us for the full year. Think of it like that. Me and my partner were there from January to December. Was that new fellow there or not? Was he there? Give him the profit. Wasn't he there? Don't give him the profit because then next year's profit only he should get. This year he wasn't there with us. No? People who are there with the ups and downs, basically, right? So that's this. Saranga was there from the beginning. Beginning, right? Double check what is the closing date always. They are saying closing date is 31st of March, no? So 31st of March 2017. When did he join? 1st of April 2016. So yes, from the beginning. Okay. So how would you do this? Think your whiteboard should have the answer to this from way back when we did it, or maybe this one, right? So very quickly, I'll show you the calculations here. But overall, the answers for this also I'll upload if there are people who don't have it. But let's quickly go through. So see, they have given a full trial balance. They have said this is the capital account, this is the current account, right? This is the land and building, whatever, right? And then they've given us the full list of debit credit line items for each of these. And then additional information, income statement. They're asking for income statement, statement of financial person, and current and capital account. I'm going to quickly revise all 4 of this, and then we're going to move to the MCQs because that's the most important thing we need to do today. As long as it gets, we have to finish it. So quick revision of this. Now, when they are asking you to do a admission of a partner at the beginning of the financial year, start off with your capital account and current account. Obviously, you can start off with that. Methana, find how much of whatever we are supposed to give each of them. Now, Methana, as you can see, current account, capital account, if you take, they have told no, they are entitled to receive a monthly salary of 10,000. So, click screen. Okay, so monthly salary of 10,000 is required. That is what we have entered here under the current account. That should come. So that is your partner salaries. 120 is because obviously it's 10,000 monthly means we're multiplied by 12. So that is entered. Partners are entitled to interest on capital balances at the beginning of the year. So you have to find out what is their capital balance. They would have given here. Here current capital accounts, Ranga, Taranga, Saranga, the opening balances are already given. 7,500, 3,000 and 1,000 it's over here, right? So you are supposed to enter those first. Enter those first and then calculate the interest on capital. So 7,500 ekranang, that's 750, 3,000 ekranang, that's 300. And anyway, Saranga is a new bugger, so he won't have opening balance in the capital account, right? But you have to take that 1,000 that he has given as cash, right? You have to record it separately. And do we give him interest on capital? At the beginning of the year, he gave the cash, no? So that is also capital end of the day. So we have to take that into account. So consider this third person, obviously from the beginning itself. Salaries, Denavana, you have to give him. They haven't told he's getting a salary, so we don't have to give him a salary. But interest on capital, share of profit, all of these has to be given to Saranga as well. Okay, so this is where the at the beginning of the period comes into play. And as if you remember properly, right? Okay. Now I'm not going to do this full question. We've already done this in class. Ideally, you should, if you can't remember it, you can try it again. The question is also uploaded. Answer also will be uploaded. Try it again. But we're not going to do the full thing again because I want to get to the MCQs. But as you can see, one by one, you can enter all the expenses. The first thing you're supposed to do, obviously, here is to calculate the net profit, which is what we have done here. Started from the sales, gone all the way and calculated net profit. And as you can see, remember, if the partner joins at the beginning of the year, if they are saying give him a salary, you have to give him a salary also. This 5,290 that we have, the net profit that we have calculated, has to be split for partner salaries, right? That's the first one. But then here they said only for Ranga and Taranga they are giving me. So 120,000, 120,000. This 240,000 we have deducted. So from this 5290, we have to deduct the 240. That's the first thing we are supposed to do. And then interest on capital also we calculated. Metana we calculated saying 750, 300, 100. That also has to be deducted. That is 1,150. After from the net profit, after we deduct a partner salary, after we deduct an interest on capital, whatever that divisible profit that comes, right? That only has to be divided into the new profit ratio, which is 2:1:1, goes to Ranga, Taranga, and Saranga. All three of them have to get it. So admission of a partner at the beginning of the year means all of them, including the new partner, gets the profit. And don't forget this part. When we are talking about net profit, we are dividing that net profit only between partner salaries, interest on capital, and share of profit. Share of profit is basically whatever that remains at the end after we give the salaries and the interest on capital also. So end of the day, right? All of if any question says calculate the net profit, don't forget that all these three have to be taken into consideration. Because net profit taken, we are dividing it 5,290 is divided into 240, 1,150 and 3,900. Okay. So that is how you do an admission of the partner at the beginning of the year. Anyway, this part is not chapter 10. This part is, as part as your usual, this thing, chapter 6 and whatever. But whatever we are breaking down as part of appropriation of profit and capital and current account is chapter 10. And lastly, goodwill. Now, how did I say we have to do goodwill? Always remember, now, Methana, they have told no 900,000 is the goodwill, right? How do you split the goodwill? Don't overthink the logic and don't remember any of that. Goodwill 900 means this is the only adjustment you need to remember. Only damn adjustment. How much is the goodwill? 900. Take that 900. Take the old profit sharing ratio. 2:1 is there. Take that goodwill 900 and credit under the capital account. You credit based on the old ratio. Now 2:1, 900, 2:1 means 2:1 can it? 2 plus 1 is 3. So 900 has to be divided into 3, which is 300. So 2 portions of 300 into 2 means 600. So basically what we are saying is like this. 2:1 kiyanne, right? Like this. 2:1. Always count the two ratios. 2 plus 1 is 3. No? So think, okay, in a cake, there are 3 portions. 2 portions for one partner, 1 portion to the other. 3 portions. Out of 3 portions, 2:1 burger, 1:1 burger, 2:1. That's 2:1. So if they have given 900, you divide 900 into 3, which is 300. No. So that means one burger gets 600, the other burger gets 300. Like that. Don't use calculator and all for this because there's no time. Accounting is about time. 2:1 kiyanne, just divide it by 3. And if they say 2:1:1, if the ratio is 2 is between 3 people, if it's 2:1:1, then basically what do you do? 4 pieces. Cake has to be divided into 4 pieces. one bugger gets 2 pieces, the other bugger gets 1 piece, the other bugger gets 1 piece. Like that, you have to divide. So if the goodwill is 900, only thing you need to remember is based on the old profit ratio, you credit. Based on the new profit ratio, you debit. That's it. Don't think anything else on goodwill. Don't overcomplicate it. Credit on the old ratio and debit on the new ratio. It's as simple as that. Haridhar. So all questions is like that. No matter whether it's beginning of the year or end of the year or whatever the hell it is, all questions basically come on that only. Hari. If they ask you to do the full expense income statement, you have to split it like this. You have to show the split and only do. If they haven't given a split that much, you can put it as expenses. That's fine, but you have to show the split. All right. So moving to the next question, very quickly, I'm going to run through this and then we'll get to the MCQs because otherwise it's thing. Ask me if you have any doubts. Question type 2 is admission of a partner at the end of the financial year. Now here, Ravi and Sarah have been doing a partnership. 2:3 is their ratio. Hari. And they've given the interest rate on opening capital account balances. All partners are entitled to receive a monthly salary here, they have said. So they're giving it seems. But on the 31st of March, there's a new partner coming in, but at the end. So if a partner is coming at the end only, he's coming into your life, right? Now see, now from the beginning of the year, he wasn't there. So then technically, now for the next year, now he's going to be there. Right, this partner is going to be there with us for the next year. So net profit for the next year, we should give it. But for the last year, he was not there in the last year. So which means he is not supposed to get any net profit. Okay. So be careful on that. We are not going to split him that net profit there. So moving into the, and if you all remember correctly, SFPAK, how do you show the equity? Under equity, you have to say capital account kiyala dala ranga taranga saranga kiyala tudama venama daanna unne. And then current account again ranga taranga saranga kiyala venama daanna. You have to show it like that. Chapter 6 and all, we just show it as one line equity. No, here we have to split it and show. You have to remember that also. Fine. So here under the second type, admission of a partner at the end of the financial year. Again, I'm just going to run through the question. As you can see, we're not giving him a partner salary because he was not there during that last year. We're not giving him an interest on capital because technically not there again from the beginning of the year. And technically, share of profit also no. Okay. And be careful with regards to admission of a partner at the end of the financial year. So if you want to summarize this, let me just put a summary of this at the end of what we are discussing. If the admission of partner at end of admission at the end, if it happens, what are we saying? New partner. No, this is beginning. First is beginning. Admission of partner at the beginning now. There are some things to remember. New partner gets the net profit and profit appropriation should happen on the new ratio. And goodwill also has to be split. Anyway, goodwill is split. No, so that is fine. Goodwill is credit debit. I just showed you. Just follow that. But this part, admission of the partner at the beginning now, new partner gets the net profit, right? And also salaries. That depends on the agreement. But salary and interest also he gets. New partner gets the net profit, profit appropriation at end of the year on the new ratio. Okay. But if it is admission of the partner at the end of the year, then the new partner does not get the net profit. Does not get the net profit. And profit appropriation has to happen for whom? For old partners based on old ratio. Profit appropriation you have to do for the old partners at the end of the year based on old ratio, because new bugger we are not considering. Be very careful on that. Those are the two main difference between these two. Admission at the beginning means profit appropriation for all partners at the end of the year on new ratio. Here, profit appropriation for old partners at the end of the year on old ratio. New bugger does not get anything. Okay. So that is what ideally we would have done here as well in terms of the calculations. So he has only Ravi and Sarath have gotten this. The guy hasn't really gotten. So the rest of the calculations is more or less the same. So here depreciation and all they have given. Those are, I think, chapter 6 stuff on how to get the equivalent prepaid and all those calculations are chapter 6, not chapter 10 stuff. And this is basically the split. So when we are doing MCQs, we'll come back to the split again. But as you can see, on the credit side, partner salary, interest on capital, share of profit has to come. On the debit capital, goodwill has to be, again, what did I say? Credit on the old ratio, debit on the new ratio. If you remember like that, it's easy. Just say debit on the new ratio. Remember that, really? Debit on the new ratio. That's it. Just remember it like that. Okay. So that's what we've done here. Right. And now we are moving into the third type. What is the third type? If a partner retires at the beginning of the year, now this is the most annoying one, to be very honest, because if he is retiring at the beginning of the year, we have to do some adjustments. You know, retirement at the beginning. Those adjustments are annoying because now we have to remove the bugger, no? Right now. So what happens here? Retired partner. If he left at the beginning of the year, will he get the net profits? No, he won't. Because he left at the beginning of the year. Now we are at the end of the year. This year he wasn't there with us, which means we shouldn't give the net profit. He retired at the beginning of the year itself. Done. Okay. So profit appropriation has to be given to whom? Existing partners. Not for the old buggers. Existing partners based on new ratio. Because new ratio after he left, it would have been 3:2:1, but then after that it could be 3:2. No? So after he left, it has to be based on the new ratio or the current between those two existing partners. Plus also, there's one very important thing here. Other than the split and all, now split and all, who are the three buggers? Nuan, Vishwa and Sandhu. Three fellows are there. Make a who left? They are saying Nuan left. Earlier ratio was 3:2:1 was the earlier ratio. New ratio is 2:1 is the new ratio. So Nuan has left. Now, if you take a look at the answers for this, retirement partner at the beginning of the financial year. Obviously, Nuan doesn't get a partner salary because he left already. He doesn't get interest on capital because he left at the beginning of the year. He doesn't get share of profit also because he left. Only Vishwa and Sandun gets based on the new ratio. So all appropriation has to happen for the existing partners only. But only thing is that challenge is when he has left at the beginning of the year itself, we have to do that capital account. Right? We have to first do the current account. Anyways, no one doesn't get anything in the current account. But remember what to do. You have to close Nuan's current account. Now he already has a 350 at the beginning. Current account Nuan 350 kila. Opening balance they have given. So we have to close his current account also. And we have to close his capital account also because he's no more. No? So to close both. So then what do? Nuan kila dala, take the whole current accounts 350, debit it, and put it to the capital account. Now this total 350 that we have from Nuan, we are debiting it, and we are putting it to the capital account. Okay, we are transferring it. So do that one by one. I'm going to put that. You can say close off Nuan's current account and put to capital account, put the value to capital account. After that, what you do, you close this capital account also. After you do the goodwill adjustment and all of that, you have to do the but no matter what happens, goodwill adjustment has to be done. Out of the four, any four, doesn't matter. the change in ownership is happening now. So goodwill adjustment has to be done. And goodwill adjustment is always the same. Debit on the new ratio. That's it. Debit on the new, credit on the old. That's it. Okay. Whether it leaves or whatever, who cares? You know what the new ratio is. You know what the old ratio is. Debit on the new, credit on the old. That's it. Okay. So here, close off nuance current accounts. Then you close off nuance capital account also. Calculate the opening balances, calculate all the adjustments that he has done, whatever. Calculate whatever the total end balance is in the capital account. Take that and put it to a loan account. Because in this question, if they didn't say, now in your A levels, of course, usually they will say it was not settled to one, so it was transferred to a loan account. Now, in this question, if they didn't say, no, here they have said it was agreed to transfer the amount payable to a loan account, and they're paying an annual interest of 10% on it. So you have to open something called a liability, a new loan open karala. You have to put that nuance total capital was 3,800. No, ega dandone loan account, okay, and then in your interest, in your SPL, you have to pay that also. So this 3,800 10% means 380, right? Ideally here, interest on nuance loan for this year's net profit, it has to come calculation, that interest, because end of the day, he left at the beginning of the year. No? So Ekadam, retired partner does not get the net profit appropriation for the existing partners. And then basically we are saying close off nuance current account and put the capital, and then close off nuance close off retired partners current account and close off retired partners current account and transfer to capital. Okay, and then close off retired partners capital accounts and transfer to loan account. And don't forget, the most important thing is include the interests payable on the loan in the SPL, the finance expenses. Yes. So these are the most important things when it comes to this set of these things that we are doing. So that is retirement at the beginning, and finally we come to retirement at the end. Okay, so now you will see a difference between retirement at the beginning and retirement at the end also. So in the retirement at the end, those are the most important things. There's nothing else, but just remember this part, very important. Anything else? That's it. And lastly, if we are moving into, and here don't forget that under non-current liabilities, if they ask for an SFP, nuance loan also has to come under as a bank loan. Bank loan dana again, nuance loan also has to come. That old partner's loan has to come under non-current liabilities. Okay. Last one is retirement of a partner at the end of the period. Now, he was there with us till the end. No? Yes. So then what happens? Retired partner gets the profits. We have to give him the profits. Retired partner gets the net profits. And then do we do a profit appropriation? Yes, we do. Profit appropriation has to be done for all the partners because this bugger was there till the end. And based on what ratio? Based on the old ratio. Because end of the day, he was also there. No? He's also supposed to get it. But I guess methana daandone at the beginning of the year. At year beginning, then you close off retired partners like that. Yeah, we'll put it clearly because you have to close it off. Right? In the beginning, the African dude who kept struggling to pronounce beginning by saying in the beginning. Okay, so let me just zoom out. So I have said at year beginning, close off retired partners current account and transfer to capital. And then again at the year beginning itself, we are supposed to close off retired partners and transfer to the loan and include interest payable, loan interest payable in the SPL and the finance expenses. Okay. Here at the year end only you're supposed to do this. At year end, whatever we did there, We have to close the current account, transfer to capital. And here also we are supposed to again year end, close off the capital, transfer to the loan account. Do we pay interest? No, we don't. Do not pay interest because this is at the end of the so for this we don't have to pay interest. Okay, so do not include, do not calculate interest for this year because it's not relevant for this year, it's relevant for next year. So this is the overall summary of the 5 types that are there. You just have to shape again, remember this. I mean, you can't memorize this end of the day. You have to just remember this, of course, with a little bit of the logic. If partner was there, okay, this is what we are supposed to do. Wasn't he there, then this is what we are supposed to do. Poddak, remember it using the logic. Hari, retirement at the beginning dunnot tamai poddak vada vadi. To be very honest, retirement at the beginning has more work to do than anything else. But, you know, lucky bastards, the new syllabus fellows, these fellows did not, see, if you go back to the analysis part, more like retirement at the beginning has not come 2024 but the other ones, retirement at the end and admission at the end only, it's come so far. So hopefully you will also be lucky, right? Saying that, okay, let's see. But so far, that's how the process has been. 24 down. Okay, you can, yeah, you can take a screenshot of this summary part. Wait. And now we can move to the MCQs. So if admitted at the beginning, give him the profit, right? If you admitted at the end, don't give him the profit. Either way, guys, capital account, current account adjustments have to be done. Goodwill adjustment has to be done. Capital account, current account, okay, obviously the names have to come. And, you know, whatever capital they've given, you put it. Whatever, you know, anything related to current account transactions, you put it. Drawings, make up the under. Right? So those adjustments anyways have to come. But as far as the differences are concerned, these are the main differences. Okay. So let's take a few look at the MCQ questions back to back. Those are the things we haven't yet done when it comes to partnerships. And that is what I want to focus on primarily today. I'll teach you some of the shortcuts that are there. I am hoping that you all would have, you know, attempted these on your own. If you haven't, that's okay. Nothing's lost. We will do it now. So we're going to start off with the 2016 question. Okay, let me just open my past papers and then we will proceed. Give me a minute. Invaling Patangan. 17, 18, 16, 17, 18, 11. Okay, right. Cut this out. Right. So in this video, what we are going to look at is all the partnership MCQs that have come, right, from the 2016 onwards. So let's take a look at the MCQs one by one, and then we'll clear one by one as to how it goes. So 2016 question, okay, there was only this MCQ question actually, question number 13. 2016 means the previous structure of the paper, previous syllabus, okay. 2019 onwards only the new syllabus starts. So 16, 17, 18, even though it's previous syllabus, it's previous syllabus means it's still the same thing. Paper structure is different, right? So the questions are still relevant. So it's okay. We will start from 16 itself. As you can see, which of the following statements is correct in relation to a partnership? Now, these are the theory questions that come. And I told you theory questions most of the time comes from the section 24, section 42. Those are the sections where that comes. So if you remember that, you will actually get these very easily. Take a look at the question. It says equity of a partnership is presented by the total of capital and current account balances and other reserves if available. Yeah, I mean, so far, obviously, we said equity is equal to total equity is equal to capital plus current. Technically, yes. But anyways, take the others. A partner is entitled to a salary only when a service is provided as per section 24. Oh, what does section 24 actually say in the first place? Let me split the screen here. Section 24 first and foremost says don't. Right? If there is nothing else, that is, if there's no agreement where a salary is given, right? Section 24 says don't even pay these buggers. So technically that's false. Yeah. Profit and losses are distributed among partners in proportion to their. Sorry, profits and losses are distributed among partners in proportion to their capital contribution as per section 24 of the partnership ordinance 80. Again, section 24 says it seems profit and losses are distributed based on their capital contribution. No. What does section 24 say? If there is no written agreement, what are we supposed to do? Right? Split it equally. There is no capital contribution. So that is wrong. Right? It says you are split it equally. So obviously then first one is technically true. Actually. Second one is false. First and foremost says that's not what it says. Excel sometimes, right? No salary is what it says. Section 24. No salary. Third one is also false. It says what? Capital contribution distributed among partners in proportion capital contribution. No, right? It says not based on the capital contribution. It says equal. Equal split is what it says. So that is also false. What about the fourth one? Goodwill estimated only on the admission or retirement of a partner. Is that correct? Goodwill is calculated only on. I told you I put a red color box around it also. Yes. What is that? Admission or retirement of a partner. So admission, retirement plus change in profit ratio. That also is there. We can't just, so this is also false actually. Right? Partner can be admitted or retired only on the first or last day of a financial year. Yeah. If a new partner wants to come, we are like, no, please wait. Now it's October. You have to wait until December if you want to. And no, obviously false. Just because in your syllabus we take it like A-level bala, because we don't want to overcomplicate things, right? We take it like that. But no, in real life, that's not what happens. To be very honest, in real life, they will join whenever they want. But then what happens, by the way, so far they haven't asked a question like that because the calculation can be very annoying if that's the case. But let's assume, will you join on the 1st of October? Partner joins on the 1st of October, what should you do? If the year end is 31st December, you have to apportion. October, November, December means 3 months, no? So 3 months out of 12. A portion karla you take. They don't want to make it too complicated, so they don't. But technically, that's the truth. Okay, so 2016 is actually a very straightforward question. If you know your sections properly, section 24, section 42, it's a 10-second answer, 10-second, 20-second, maybe 30-second answer maximum if you want to read it properly and answer. But be careful with these theoretical questions. They are the ones which are the most tricky ones, to be very honest. Okay. Right. We'll move to the 2017 one. 2017 wala question number this one. So there's no theoretical question in 2017. Both are calculation questions. Question number 13 and question number 14 kela dekak tiyenawa. They've given a full ass calculation for us to look. Fine. I'll bring the question here. Read the question first, right? Let's quickly try and do it. All these MCQ questions, listen to me carefully now. If you want to be fast in it, you take again from 2016 till whatever year and you do it from the beginning. Again and again you do it. But all of these questions, okay, the method is the same. You start off by drawing a capital account, current account, you enter whatever they have given. That's it. You calculate. Either they will ask you to calculate the goodwill or they will ask you to calculate, some profit or something like that. But the process is the same. You start off with a capital account, current account. And that's the process. Okay. So we'll come to that. Amal and Kamal carried out a partnership sharing profits and losses in the ratio of 2:1. Vimal was admitted as a partner on the 1st of April 2016. Quickly check the dates. Make a key. They are saying April 1st, 2016. So that means basically you have to quickly go and check what is the year ending here. Year ending is 31st of March 2017. So that means Vimal came at the beginning of the year. That's the first thing you need to understand. Vimal came at the beginning. Beginning. Okay. Not at the end. That's the first thing. Fine. What are they saying after that? He invested 500,000 as capital. Goodwill estimated on this date. See, don't waste time reading it. You know Amal, Kamal, Vimal, quickly draw a current account and a capital account, right? Because then as you read, you can go enter one by one, end of the day. Because otherwise this is going to become unnecessarily complicated. So don't spend time reading it. Directly go and enter, right? There are three partners now. You draw current account and capital account, which has three columns like this. I'm just bringing my current accounts, capital accounts, right? You can say it's Amal, Kamal, Vimal. So you can say Amal, and then Vimal. Amal, Vimal, just 3. And this is basically your current account. And this is your capital. Get it done as soon as possible. Okay. Now, when you are reading it one by one, you can actually start recording. Right? Current account, capital account, both you have. Now you start recording. So they are saying carried out a partnership 2:1. So old ratio is old ratio is 2:1. What is the new ratio? New ratio is 3:2:1. 3:2:1. Take up. You can write it on the top somewhere. It will be useful later down the line. Okay. Okay. They have given the opening balances. Can you see here? They have said following information is provided. Amal, Kamal, Vimal. Always, most of the time, these MCQ questions always give you opening balances. You start with that. So they have given this BBF. For both of these, they have given. Check this. 31st of March 2017 means closing balance. 31st of March 2016 means opening balance. No, so they have given both. So we can put BBF at the closing balance BBF also. So these are capital and current accounts means that will be credited as well. So to put it on the credit side, right? So then check. Now what are the opening balances? 2016 current account 500, 300, 0. So this is 500, this is 300, this is 0. That's your current account. Now, and then capital account opening balances 2000, 1000, 0. 0 because Vimal wasn't there. No? So 2000, 1000, 0. And then what about closing balances? This is the closing balance. Current account 2017 now closing balance. This is the first thing you are supposed to do. All the MCQ, the first thing you are supposed to do. End of the day, that's how it comes. So here they are saying 650, 750, and then current account and then capital account 2,200, 1,000 and 300. Now tell me, for those of you who know this, yes, all of you know this, If you know BBF, what do you know? You also know BCD. Ekat daganda, whatever you know, tati piti gala put it. You know BCD here, you know BCD here also. If you know BBF, the closing balance, then the BCD also has to be that, right? So obviously put that. So far, you have the opening and closing balances. Now, whatever they ask in the middle, you can back calculate. All MCQ questions are mostly like this only. Just the back calculation of so many things. Just figure out what the back calculation is. Okay, so now they are saying he invested 500,000 as capital. Now the Vimal came at the beginning of the year. He has given 500,000 as capital. Where are we supposed to put that? In the capital account, right? So whenever a new partner gives capital, he gives cash. So we are supposed to record it as debit cash, credit capital account. Because it's capital, no, end of the day. So put the cash. How much has he given? 500. You put the 500. Done. That is Vimal. So all the black color stuff are the things they are told there. I'm using a color code. All the blue color stuff I'm going to calculate and show. Okay. So cash 500. With me so far, nothing of Amal and Kamal. So far we've entered that. Next one. Goodwill estimated on this date was adjusted. They didn't tell the goodwill. In MCQ questions where they don't tell the goodwill, usually the question is to calculate the goodwill. Can you see? The question is that here, goodwill estimated is what they're asking. So they have given the goodwill. No, so now our back calculation is what? Goodwill. Fine, we'll do that. Profit and losses are shared among Amal, Kamal, Vimal, 3:2:1. Fine. Kamal is entitled to an annual salary of 360 on mercy. Racism, tourism, I don't know what ism this is, but only Kamal is actually getting a not share of profit. What is he getting? Annual salary. Only this bugger is getting an annual salary. How much? 360. Okay, the under. Current account again. So to put that is the partner salary we are talking about. You can just say partner salary. The other two buggers are not getting this. Fine. With me so far. All good? Right. So listen. Moving on. All right. So now what are they saying? That's it. That's all. No, there's more. There's more here. Don't miss this. My God. They have said Amal and Kamal have not provided additional capital during the year. Drawings of partners are also there. So drawings is on the debit side. No, put it on the debit side. Drawings. Amal is 210. Kamal is 200. Vimal is 70. That's it. Now we are done. Have been adjusted through current account. Drawings are done. So that's it. Now they're asking us calculate goodwill. Now using this data, how the hell are we supposed to calculate goodwill? Back calculation. Goodwill comes in the current account or capital account. Capital account. Forget about the current account for now. Then focus only on the capital account. So question number 13. Okay, we are said focus on the question number. This is question number 13. We need to find the answer. It says calculate the goodwill. Let's do that first. First and foremost, from this data, do we have any other entries to put in the capital account? No, right? Try to balance it now. They have given us the closing balance. BCD is also there. Now they are also saying there are no other transactions. Then technically, can we assume that Vimal's total, there are no other transactions. Vimal gave 500. That's it. So technically then on this side, because Vimal joined at the beginning of the year, right? Vimal's total has to be 500. Why am I confident that Vimal's total has to be 500? Goodwill goodwill. Debit on the new ratio, which means all three buggers get it. Debit. Credit on the old ratio, which means only these two buggers get it. Correct? Credit on the old ratio, debit on the new ratio. No? So Vimal doesn't get any of the goodwill on the debit credit side. Right? Only on the debit side is there. So you have to remember this, by the way. MCQ is not going to do it faster. But the more and more you do this, it will come to you. But so technically then we know for sure Vimal's total is going to be 500. If we know that Vimal's total is 500, Vimal's total is 500. Okay. If we know that Vimal's total is going to be 500 on this side, okay. Technically, we know that his total has to be 500 on this side also, because both sides total have to be equal. Correct. So that's how I'm arriving now. So Vimal's total is 500 on credit side, which means on debit side also it has to be equal to 500, which is that 500 that I put here. If this is total is 500 and the BCD is 300, how much is the goodwill on the debit side for Vimal? 300, 500 minus 300 is 200. Therefore, right, Vimal's BBF, Vimal's BCD is equal to 300. Hence, Vimal's goodwill on debit side can be back calculated as 200. Did you see what I did? That back calculation has to be done. In questions in MCQs like this, no choice. That's the way how we do it. What did I do? Put the two current account, capital accounts first and foremost. That will finish off as soon as possible. Once that is done, we know that anyway Vimal won't have goodwill on the credit side because it's the old ratio. Old ratio, Vimal is not there. Vimal is the new bagano. This is the old ratio, right? 2:1 and 3:2:1. So 2:1 ganna kota meya naane. Vimal is not there. Right. So then we know this total is 500. If we know that this total is 500, that's where the whole clue is. This total also has to be 500. That's the shortcut. That's the way. If you know that, you know 200 is Vimal's goodwill. If you know 200 is Vimal's goodwill, you can calculate the total goodwill. How do you do that? What is the new ratio? 3:2:1. That's the new ratio. So new ratio is 3:2:1. Yes. So what does that mean? 3:2:1 can 6, no? Totally 6, right? So we know that if Vimal is getting 1 out of 6, right? 1 divided by 6, 1/6 of that goodwill is equal to how much? 200. One portion is 200. Yes, that's what it means, right? Vimal 3:2:1 means 1 is 200. If 1 is 200, how much is the total? Total goodwill is 6 pieces are there. 1 piece is 200. If you want to calculate total, 200 multiplied by 6. And that is basically 1200. So your total goodwill is 1200. That is how you do this calculation. You have to remember this method. This is repeated again and again all the way through 2024. Whatever the year you're going to do, basically, all the way till this shit is repeated. All you have to do is tactfully calculate the totals, do the back calculation and get it. So if this is 200, how much should this be? 200 multiplied by 3:2:1, so 2. It's 400. How much should this be? 200 multiplied by 3:2:1, 3. So this is 600, that is 400. This is 200, total is 1200. Is there an answer that says 1200? Yes, there is an answer. Unfortunately, 2 answers that says 1200. So that means what now? We are still not yet done. We have to now calculate the equity. Shit. Yes. Okay. So now let's calculate equity. Hari, how do we calculate equity of a business? We have to take equity of the business. We have to take current account. We have to take capital account. We have to take both. So there are 3 people. Amal is there. Vimal is there. 3 people are there. Quickly calculate what are their totals, the BBFs. So current account is 650, 750. Current account totals are 650, 750. Oh, you make a deal and the capital account total is 2,200, 1,000 and 300. To be honest, there's a shortcut in this question. You don't even have to calculate the goodwill. Yes. But anyway, for the next part of the question, you have to calculate it. So I guess, but where you could have saved time on this question is, I will show you. So 1,400 and 3,500 then. So if you take this total, how much is this total? 4,900 is the total. Is that answer there? Yes. The last answer. The 5th answer is the answer. So to be honest, the shortcut in this question is, that's what one of the tricky things they did in this question is, the most of the time students don't look at the answers. They immediately draw the current account, capital account, they start calculating, they start calculating. But if you had just looked at the second part, equity is what they're asking. Equity means balances, total balances of both the buggers. That's what it means. All the BBFs are given in this question. There are some questions where it's not given, you have to calculate it. But in this question, all the BBFs are given. If the BBFs are given, you can directly put it and take the total. which is 4,900 from the answers. But then here from the answers, there are two answers that says 4,900. So anyways, then you have to come back. But then goodwill, one look at the question, you can understand goodwill is not 200. It has to be more because this itself is 500 or minus 300 itself is 200. No, so it can't be 200. It's going to be more here. You can simply arrive at the answer saying it's the fifth one. But anyways, this is the process to do it. Do you understand? Question number 13 is done, but we are not still done. Now we are to do question number 14. See how long one question is taking. But the truth is, if you're fast, if you're used to this, you don't have to worry. You can do it. If your product, the first few only will take us a little bit of time until we get used to how to do it. But then you will now see it's a repeat telecast of the same process. What are they asking now? Profit for the year. And what is the profit distributed to Kamal? Okay, what did I tell you? Profit means everything. So now we come back to this. Now goodwill no need to worry about the capital account. You can just go back to the current account. But if you want to fill this, goodwill is 1,002. Old ratio is 2:1. So this has to be 800:400. And then with that, you can put all the totals. Anyway, Adalana. Okay, we'll come back to the current account. Now listen. Current account, okay, we put the partner salary. Okay. They haven't told about interest on capital. So you don't imagine and you don't put interest on capital. Forget about it. But share of profit is there. Now that only we have to calculate. How are we supposed to calculate share of profit? Come back to the question. Have they told us the new ratio? They've told us the new ratio. Fine. How do we calculate the profit? They've told us the new ratio. But like, how do we get the breakdown for each of these guys? See, they've given us opening BBF and they've given us the closing BBF. Usually, if they give us the opening and the closing, if both are there, you can always do what? You can back calculate. So, we know the BBF is 650, 750. So, with that, we took the BCD. Now, we know on the debit side, there are no other transactions. End of the day. Only drawings is given, nothing else is given. So take the total. You know that this plus this is equal to 860 and then 900 and then 120. You know that these are the totals. If you know that these are the totals, that same total has to come to the other side, right? Totals have to be equal. This is how you figure out. It has to be done this way only. So you know the left side total. It has to be equal to the right side total, which means what do? You back calculate share of profit. How do you back calculate? 860 minus 500 is 360. Metana 900 minus 360 minus 300, which is 240. Metana 120 minus 0 is 120. So technically, you found the share of profit. That's it. Now check if this is 3:2:1. 360 is 3, 240 is 2, 120 is 1. Correct. It tallies with that 3:2:1 ratio. You've gone wrong somewhere. Right? So you can say this tallies with the 3:2:1 ratio also. So now we are fine. So now what do we know? We know the partner salary. So, okay, come back to this now. If you want to calculate the total profit or total net profit, right? What should you do? You have to take the salaries plus you have to take the interest on capital plus you have to take divisible share of profit. Don't forget this formula. Very important because most of the people go wrong here. Now, Baland, now what did we do? 360 plus 240 plus 120. Tatkala students, what they will do is they will see Ammadasiri 720. Elakiri, we know how much is the profit for the year. 720. Ammadasiri answer is also there. 720, 720. There are two answers. Elakiri, we are done. Okay, Kamal also got 240. Therefore, the answer should be 720 and 240. Supiri Balavege, the answer is 2. That is wrong. The answer is not 2. Why? Because they are not asking for share of profit. That divisible profit is not what they are asking. How much is the total profit is what they are asking. Profit for the year. So if they are asking profit for the year, it's partner salaries plus interest on capital plus share of profit. What you just took is only the share of profit. We can't take like that. So here, total profit is equal to partner salary, only one fellow got, so that's 360 plus the total share of profit adds up to 720. So 720. So how much is the total profit then? 360,000, 1080, 1080. This is the total profit. Is that answer there? 1080? Yes, 1080 is also there. And now back to Kamal. Now the question is the answer 1080 and 240, or is the answer 1080 and 600? Now, Etanath there's a bad trap. Children who do this question correctly, students who do this part correctly, they'll be like, okay, Lakiri, finally we have found the answer is okay, 1080 superi. Then Kamal also got 240, no, done. 1080, 240. They'll mark that and go. That is also wrong because they're asking what is the total profit given to Kamal. And that also they are saying total profit distributed. Etana partner salaries has to come. Don't forget this. You understand what I'm saying? Total profit distributed, which means Kamal's salary, which is 360, plus his share of profit, which is 240. Both has to be added. And then only comes the total profits is equal to 600. So the answer is the fifth one. You saw how there were two bear traps. Now, if you know that this is the bear trap that comes, you won't fall for it. Now you know in the next question, you won't fall for it. But if you don't know, you will fall for it. That's the truth. Any student will fall for that if they don't know. Understood? So next one, don't fall for it. Just remember this. Remember this goddamn formula. Our total profit is equal to partner salary. Interest and capital is not given, so you don't have to worry about it. Remember this formula. Yeah, as if your life depends on it, you remember it. Okay, so that is your 2017. I know it was probably very confusing. Okay, and probably very too fast also for you, maybe. And you would be like, what the hell is this? That's okay, because now you will see most of the questions repeat telecasts. Same thing, repeat telecasts. Yeah. So you can take a screenshot of the 2016 question, whatever I have written there, you can take a screenshot. It also has the current account and capital account for 2017. So take a screenshot of this, do this question on your own. You won't understand 2017, it's okay. Then we do 2018 now, you will understand. Okay. Then you come back and do 2017. So you can take a screenshot of this as well. My notes. Remember this note. Wait, let me zoom in. Remember this note for 2018. What should we do? Somehow or the other, back calculate the shit out of this. That's what you need to remember, right? Put the capital account, current account, fill it as much as possible, and then as wherever possible, based on whatever they're asking, back calculate. If opening and closing balances are given, you can back calculate. If that is not given, you figure it out. And then don't forget, total profit means partner salaries and interest on capital and share of profit, because that is where the next bad trap comes. Okay, right. Let's move to 2018. You now try. I'm going to draw everything one by one, right? But now you think, when I'm doing it, you think, okay, this is what we are going to do. Okay, and then you come back and try 2017. It'll actually be easy for you. After you're done with the full set, it'll actually be easy. Okay, so let's do 2018. Don't rush partnership questions. Don't rush. Partnership is very tricky. You'll be very careful when doing it, especially when doing the back calculations and all. Buggers are after you. And everything basically that is there after you only, right? Okay, next. Read this now. Following information relates to Nalinda and Shanta partnership. So there are two people this time, not three, there are two. Okay, next. Balances. So opening balance, closing balance is given. Now you can see, the trend. You can see the trend. Opening balance, closing balance is given, which means there's going to be a back calculation. So don't read, don't spend time reading. Immediately, what do you do? Draw the two accounts, because if not, it's a waste of time, because you're going to read it and then come back and again draw it. No. So don't waste your time. Immediately draw. right? So you have your partner's current accounts, you have Nalinda Shanta, and then you have your partner's capital accounts, again, Nalinda Shanta. This time there are only two people, no? So there are no three people in this question. Immediately you draw 2, 2. Now we start. Do we have the opening balances? Then what do you do? PBF, PBF, right? If I don't know if the now here they have not given the opening balances. They have only given the closing. Or have they given opening also? I don't know. Then BBF, BBF here. Fine. Let's see if it's there or not. Okay, where's that red color box? Now, one by one, when you're reading, enter it, and go. As you go, enter it and go. Okay, so 2018. Following information relates to Nalinda and Shanta partnership. Balance as at 31st of March. Taggala, go and check what is the last year. 31st of March 2018 is the year end, which means 31st of March 2017 has to be the year beginning. So then this is opening BBF. Okay, start with that. So capital account is given, current account is given. What is capital account? Capital account is 800, 500. Current account is, sorry, that up one is current, no? 200, 100, and methana 800, 500. Done. Okay, cool. Ilangada 1st of April 2017. So once again, that is also beginning of the year. At the beginning of the year, Nalinda provided an additional 200,000 as additional capital. Like Baga has given additional cash. So enter it. He gave cash now, put it in the capital account. Where else to put it? Shanta provided 500,000 as a loan. Now, loan is a liability. Don't come and enter that in the current account or capital account. Do you understand? Because what is the double entry for a loan? Debit cash, because cash is coming. Credit loan. So you open a new loan account for Shanta, but don't come and put it in the capital, because that has to be treated as a liability. Don't put it here, but obviously there's interest. Annual interest for this loan is 5%. That we have to calculate. 5% is the loan on interest. It is credited to the current account of Shanta. So they've done it correctly. We have to put that here. So let's say loan interest. Loan interest. Now, how much is the loan he gave? 500,000 is the loan he gave. Correct? Taggala, record that. 5% multiplied by 500. What is 5% multiplied by 500? 10% multiplied by 500 is 50. That means 5% has to be half of that. So that's 25. So 25 has to come. Who is the one? Shanta is the one who gave. 25. Done. So 25 is done. Loan interest is done. Good to go. That's it. There's nothing else to do. Profit and losses are shared between Nalinda Shanta. Ratio is 3:2. Oh, so ratio. No old ratio, new ratio here, because there are no changes. So that means there's no goodwill. Appa, thank God. Right? 3:2 is the ratio. They are entitled to an annual interest rate of 10% of the closing balances of the capital account. Then we have to calculate the closing balance first, and then only we have to put interest on capital. Interest on cap, 10%. Let's calculate and come. 10% multiplied by closing balance. Where to calculate and come. Don't know whether there are any other transactions. So let's finish it and come back to that. That's all. Profit of the partnership for the year ending is 500. Oh, so profit of the partnership means what? What is profit? Total profit is what they're talking about. Don't forget this. This is where they pull your leg. They are saying total profit is only 500. Okay, which means salary, interest, is only for 500. Okay. During the year, Nalinda Shanta have drawn cash. Okay, so there's drawings. Put the drawings. How much is drawings? 100 is there, 50 is. That's it. There are no other cash withdrawals by the partners. So that's it. What are they asking us to do? Equity is what they're asking us to do first. So we need the closing balances. Again, we have to finish all of this. And then we have to do the net cash received and Shanta's current account balance. Now, we know the total profit. They have told there is interest on capital. Have they told anything about partner salaries? In the whole question, it wasn't there. So you assume not there. They didn't take a salary. We didn't give a salary. That's all. If they didn't say it, then you assume it's not there. It's as simple as that, right? So Now, come back now. There's no other capital account transactions. There's no goodwill also. No. So you can take the total here. This total is 1000. This total is 500. If I know the totals 1000 and 500, can I calculate the interest on capital? Yes, 10% is 100, 10% is 50. So these two I calculated. These two I calculated interest on capital because based on these two. Because there's no other calculation for the capital account. No. So that, right? This is actually easier than the 2017 one. 2018 is actually easier, right? Now we know, Hari, share of profit is what we are supposed to calculate. Now, don't make that cardinal mistake of, to be very honest, if you make this mistake, also this answer comes. See, they told 500 is the profit. No. Now, some students who don't know this formula, this life-changing, I don't want to swear, but life-changing awesome formula, if they don't know this, what they will do is, they will assume that the share of profit, basically, profit is 500, ratio is 3:2, less and so that means 300 for this bugger, 200 for this bugger, less and they will balance it and go and find out. The answer will also be there. But that's not how you're supposed to do it. Yes. What did I teach you? Total profit means 500 is basically an addition of everything. So we know that then this 500 is basically, right, an addition of, so 500 is the total profits. This 500, we have to deduct the interest on capital. What is the interest on cap? 150. This 150 has to be removed. Whatever the difference, that 350, that is only share of profit. Don't fall for that cardinal sin. I mean, cardinal mistake, because if you do, that is where you go wrong. So don't forget this formula. Again and again, I'm saying that's the formula that will screw you if you forget. This formula, by heart the damn thing and keep it. Or like, stick it up on a bloody wall also and keep if you can. Don't forget this. This is everything. So now it's a matter of just balancing it and it's a matter of finding the answer. This question is actually easy. It's easier than 2017. If this is 350, 3:2, no. So 350, 3:2 means that's a total of 5 cake pieces are there. So divide 350 by 5, 70, no. 35 divided by 5 is 7. So 350 divided by 5 is 70. So 70 multiplied by 3 is 210. 70 multiplied by 2 is 140. So 3:2. That is how you're supposed to do it. And then 5, 350 divided by 5 is 70. 70 multiplied by 2 is 210. 70 multiplied by 3 is 210. 70 multiplied by 2 is 140. So this is the share of profit. That's it. Now you can answer that question. What is that question asking? Equity is how much scale ask. So equity means take the total. So question number 14. Take the total for equity. Nalinda Shanta Kela dennek innawa. So let's first calculate. No? So take the totals here. How much is the total on this side? This plus this plus this. 510. This plus this plus this plus this. 315. So if these are the totals on that side, that same total have to come on this side also. 510, 315, same totals, which means BCD is how much? BCD is methana 410, methana 315 minus 50, 265. So that's the same number, 410, 265. So now we know current account is 410, 265. So total is 675. Capital account anyways is 1500. Anyways, BCD is going to be the same. So the total is 2175. The answer is the fourth one. Median 2175 and fourth one is the answer. That was okay. As long as you don't forget that formula. Right? Well, next one they are asking net cash risk. So this one you know, right? It's 1500, right? Because BCD is nothing. This also will be 1500 anyways, which means BCD is also 1500. Yeah. If BCD is 1500, then obviously BBF is also same. 1500. and 500. Okay. Okay. What about the question number 15? Shanta's current account balance. We'll start with that. We know the trick. So question 15 wala. What is Santa's? Santa is 265. So there are two answers that has 265. At least give us a break. No, more than that. There are two answers that has 265. So they are asking now net cash received is how much? Two answers that has 265. So Santa's current account, anyways, we know is 265. Fine. What about net cash received? What is this net cash received? What the hell does that mean? Whenever they say net, what does that mean? Net means cash received minus cash paid. Whenever they say net, that's what it means. So let's see from the business, what is the cash received? Who gave us cash? Nalinda provided 200,000 additional capital. Shanta provided 500,000 loan. So that's the cash. Cash received is 200,000 capital coming in plus 500,000 loan coming. Those are the two cash. Basically 700 is the total. Yes. With me so far? Fine. What about the cash paid? Is there any other cash? Annual interest is there. Profit and losses. Entitled to annual interest rate. Profit for the partnership was 500. Profit is 500. We are not paying profit. We have not, like a divisible part, we haven't still done. Or we have put it on the credit, but we haven't still paid this. Whenever we put it on a current account on the credit side and keep, we haven't paid it out. They haven't taken it, but have they taken cash? Yes, Mick. They have taken 100,000 and 50,000. Or drawings they have taken. So we are recording it in the account and keeping. Whenever they take it out, that goes out as drawings. No. So that is only cash pay. 100 plus 50. Both are drawings. Each of them took. These are the drawings part. How much is 100 plus 50? 150. So that means net cash is equal to 700 minus 150, 550. So the answer is 550. There is an answer like that. 265 and 550. Answer is the third one. Here, this one. This was actually to a certain extent easier than the 2017 paper, because 2017 had the goodwill also. No, this one didn't have the goodwill. So here the bear trap was here, this one. Total profit, that was the bear trap, and the net cash. If you didn't know how to calculate net cash, you might have gotten that wrong. But other than that, it was okay. So whenever they say net, always remember it's received minus paid. So you have to take the difference between the two. Understood? You can take a screenshot of this. That concludes 2017 and 2018. But we did this 2018, right? Yes. So 16 is done, 17 is done, 18 is done. 3 years done. It's about doing this on your own, okay? And doing this again and again. That's what it's about. Because you will see from the past 5 years, whatever it is, the same kind of questions gets repeated again and again and again. And the more you do, the faster you get, and automatically it will get inbred in your brain. It will just get etched onto your brain. So that's it. Because end of the day, it's about repeating. So it's okay if you don't understand. It's all right if you haven't understood any of these two, but you will realize when you do this on your own now and apply this for the 2019, 20, and whatever the next set of questions that come, you'll be able to actually do it fast. Okay. So we're cutting this video here, and I will resume the next video for 2019 question. Okay. Cool. I'm going to cut that video, and then the next one I will resume for 2019. So far, so good. Let's take a breather before we move to 2019. I don't know whether you guys have done these MCQs on your own. If you have, that is good. Okay. If you haven't, it's okay. Do it now. Basically. Okay. All good so far? Any questions? Any of the questions from any of these things we have asked? See, like I said already, right? If what matters is doing it again and again. For partnerships on MCQs if, and paper two also, if you want to get it correct, right? And if you want to score well in partnerships, just sit down from 2017 or 16, whether there wasn't a question, or 17 in the 2024 venaka, එක දිගට කරන්න. Again and again do it until that gets inbred in your brain, until you by heart the method. Because the method is the same. As you can see, it's about current account, capital account. Now, next set of questions you see also, it's going to be the same, right? You just have to do that two accounts. You just have to do the calculations. You just have to do the back calculations. And then you have to arrive at it. That is all there is. So until it gets inbred in your brain, do it again and again. There's no other way to perfect partnerships. No matter what you do, nothing will work other than this. So just get it done, guys. Don't overthink. Okay. Don't overthink. Don't worry about it. Just get it done. Harry, if you have any questions, please ask. We will proceed. Why don't you guys try 2019? I'll give you maybe a 5-minute head start. Even if you have done it, it's okay. Let's say you have done the question, it's okay. Let's see if you can solve it within 5 minutes. Now that you have done the question also. If you haven't done it, do it now. Harry, now I've told you the method. Take a rough paper, take a rough sheet, right? Don't overthink, don't overcomplicate. Take a rough sheet and then start. Okay, are you ready? 5 minutes, then na, puluhan na kara. 5 minutes ready, but it's okay. 5 minutes, then na. Start. Even if you have done it, it's okay. Do it again. So similar, very similar kind of question. Put the current account, put the capital account, immediately start it and do it. Let's see. You have 5 minutes and let's see if you can find the answer and then we'll discuss. Okay. Right. Even if you have done it, it's okay. I want you to do it again. Let's test your speed. How's it going? Are you done? Were you able to tackle it? Did you fall short? Shape are you getting the hang of it? Shape, no? So we'll do it now. I'll show you how to do it again, but it's more or less the same thing that we did for 2017. The same thing. So it's about, it's about doing it more and more. That's all what it is about. So let's finish 19, 20, and 21 in one shot. Let's finish. Then we are done with at least 6 years of MCQs. So let me start. So like I said, in this, it's all about practice. It's all about practice. It's all about doing it again and again. Okay, let's start. Right. So in this video, we are going to discuss the 2019 question that has come from the partnerships. As you can see, the question is on screen. So Madhu, Nilu, and Raju carried out a partnership sharing profits and losses in the ratio of 3:2:1 respectively. So don't waste time. I've told you already, as far as these kind of questions are concerned, immediately you draw the current account and the capital account immediately. So there are three partners, Madhu, Nilu, and Raju. So immediately draw a current account for them and immediately draw the capital account for them. And you can go ahead, like you can, as you read, you can proceed entering the transactions one by one. You understand what I'm saying? So don't sorry, I'm just trying to adjust the page there. Don't worry too much about it. So Madhu, Nilu, Raju carried out. Here, of course, obviously they have given us the opening, closing balances. They're asking for the goodwill, I guess. So here, then we have to do the goodwill calculations as well. Current account, capital account. What is the net impact of the goodwill adjustment? Okay. Right. So let's do it. So what have they given us? Madhu, Nilu, Raju carried out. 3:2:1 is the ratio. Somewhere just write down the ratio and keep. Because I'm assuming somebody left. Raju left. So old ratio is 3:2:1. New ratio is 2:1 after Raju left. Balances as of 1st of April 2018. 1st of April 2018 is basically what is given. So when does the year end? 31st of March 2019 is when the year is ending. So quickly fill up the current and capital accounts. BBF. Okay. BBF current account is 400, 200, 100. Capital account is 3,000, 2,000, 1,000. That is done. And then partnership earned a profit of 600. So the profit is 600, but don't forget, that means it's all of it combined, right? Partners capital, partner salary, interest on capital, everything. Raju retired from the partnership on the 31st. So end of the year only he has retired. Amount payable to him on this date, 1,500 was transferred to a loan account. Now be careful. Think properly. What does this mean? They have said the total amount that is payable to Raju, which means that is Raju's, technically that is Raju's, the loan account amount. So that means that is his total capital account end of the day. We have said no, take the total capital account that we have from Raju. Yes. And then from there you close it off and put it to the loan account. So if they are saying 1,500 is what we are supposed to give him, then his total capital account was actually 1,005. Okay. That you're supposed to know first and foremost. After that, they are saying Madhu and Nilu continue the partnership. 2:1 is the ratio. Goodwill of the partnership is adjusted to the capital. Goodwill is not maintained. Is not, yeah, goodwill account is not maintained. To be honest, that's all. This question hasn't given anything else. So that means in terms of share of profit, now we know that, we know this part, right? We know total profit is equal to partner salary plus interest on cap plus share of profit. That is the formula that we know, right? But the thing is, here in this question, we don't have to worry about this because why? They have not really given partner salary or interest on capital. They have not mentioned it even. So if they have not mentioned it, we don't have to worry about it. We don't even have to care about this formula at all. We can just directly break it down. So they are saying share of profit, how much is the total profit? 600. If total profit is 600, split that into a 3:2:1 ratio. Why are we going for old? Because this fellow retired at the end of the year. Neither. So he retired at the end of the year means he has to get the profit. Right? Because he retired at the end of the year. So that means 600 means 3:2:1. So 3 plus 2 plus 1. 3 plus 2 plus 1 means 6. No? So that means one cake piece. One cake piece is basically 100. 600 divided by 6. So that means 3:2:1 means 300:200:100. That is the breakdown. So this one we know. So 600,000 is the profit. So we have split that. No problem. We don't have to worry about partner salary. We don't have to worry about interest on capital because none of that is given anyways. So we assume it's 0. Now we know what is the current account situation. All good. And then we need to now talk about the goodwill. So before that, now see, this is about Raju retiring. If Raju is retiring, remember, what should we do? I told you, whenever a partner retires, we have to close his current account and move that to the capital account. Yes. So let's close. Metana, he has 200. Raju has a total of 200. This 200 has to be what? Has to be moved out. And his current account has to be closed. So this 200, I am moving it out. I'm moving it into the Raju's capital account. Don't forget to do this. If you forget to do this, so here in this question, the bad trap was that. If people had forgotten to do that 200 movement to the capital account, and if they tried to close it off and calculate the goodwill without that, then they would have been wrong. But now everything is done. So we have calculated profit they gave, we calculated that. 1,500 they gave, we put that. That's it. The only thing that's left is the goodwill. So we know goodwill based on the old ratio has to come on the credit side. Based on the new ratio has to come on the debit side. Now we can calculate this, right? We know 1,500 is the total. 200 we brought here. He already has 1,000 at the beginning. So this 300 is what? Back calculated. So that's it. The whole jing bang or the whole bear trap in this question was first and foremost breaking down the profit. That was maybe most of them would have gotten it. But closing the current accounts. Closing the current and bringing here was the main thing. So anyways, now we know 300 is back calculated. So if we know now from the old ratio is 3:2:1. So if you want to now calculate using that same method that we used previously, right? Now see, question number 16 is what we are trying to do. We know that, right? If Raju's goodwill is equal to 300. 3:2:1 is the ratio, and whole profit ratio is 3:2:1, which means 1 out of 6. That is only 300, which means how much is goodwill? Total goodwill is equal to 300 multiplied by 6, that is 1,008. So the answer is 1,008. Yes, the answer is the fifth one. That is question number 16. And then question number 17. What's the answer? net impact of the goodwill adjustment on the capital account balances of Madhu and Neil. Now we have to calculate their balances also. So what's happening to their balances now? If goodwill is 300, 3:2:1 ratio. No? So 300 means 3 means 900 here, 600 here. That is goodwill. Old ratio and then new ratio. 1800 is the goodwill now. What is the new ratio? 2:1 is the new ratio. So 1800 divided by 2:1 means 3. No, 1800 divided by 3 means 600. So Madhu should get 1002. Neelu should get 600. Now we have to balance this. What's happening here? So anyways, now this 1500 also has to go off. No? It has to go to Raju's loan account. This 1500 has to be debited and has to be sent off. That is how we are supposed to do that. So what's happening? Now see one by one. What is happening to Madhu's capital account and what is happening to Neelu's capital? Be careful on this. This is the next bad trap in this question actually. One by one, be very careful and do this. What did the goodwill do to Madhu's capital account? We debited or we credited by 900. So based on the old ratio, we credited 900 and we debited 1002. This is based on the new ratio. Credit 900, debit 1002. Methana old ratio. Old and new. Old, new. What did we do here? Credited 600, debited also 600. So technically, since we debited and credited the same amount, no impact. Methana, there is no impact. Neelu's account, there has to be no impact. Because credit 600, debit 600, nang it's 0, no credit and debit cancels off, right? Neelu, no impact. There are two answers that come. So we have to now do Madhu. So Madhu's debit is more. 1200 is debit. Debit is more. Credit is 900. So we are talking about a debit is more. Since debit is more, see, this is an equity account. Now this is where sometimes people go wrong, right? If you think, okay, debit is more, no, so then it should be increase. What that? Why? Because whenever equity accounts we debit, what happens? Equity is a liability. It's on the right hand side of the accounting equation. So whenever equity accounts are increasing, we credit, not debit. No. Whenever equity accounts are decreasing, only we debit. So if debit is more, we have decreased by 1002, increased by 900. So the decrease is only more, debit is more. So that means the answer should be decrease of 300. Difference is 300, debit is more. So the answer should be decrease of 300. So what is the answer? Decrease of 300 and then no impact. The answer is the third one. Neelu's capital, no impact because debit and credit will cancel off. Madhu's capital, debit is more, but that doesn't mean it's an increase. Debit for liability, I mean equity accounts or liability accounts, whatever, it means it's a decrease. So that is the next bad trap. There was one bad trap here in terms of the decrease part. The other bad trap was in the current account part where you have to close the current account and put it to the capital account, that part. But other than that, it was a straightforward question. You understand? So hopefully you got it correct. You can take a picture, you can take a screenshot of the notes, and then we can move to the next one. Do these again and again until you get it correct. Do not give up. Do these again and again. Do not back down also. Do these again and again until you get it correct. You will get it correct. Don't. It's about practice. Okay. So there you go. I think I've given you 5 seconds for that. Moving on to the next parts. So 2020 is the next question. Let me bring the question here. So firstly, 2020 had a theoretical question, first and foremost. After that only, it had a calculation question. So, abhi balamu theoretical question first balamu, it first will come to the calculation. Okay. So look at this. Which of the following statements are correct in relation to partnerships? Partnerships should not follow accounting standards when preparing financial statements. Salaries, let's come back to that actually. Okay. No, first, no, nothing to come back actually. Think about it. Partnership should not follow accounting standards. If you want, you can. We are not saying you should. Again, it's not a must because I mean partnerships are not PVT limited companies. But when you're doing accounting, you have to follow the standards end of the day. You can't do whatever you want. No. So should not follow accounting standards. Yes. So should not because should not you can't say should not, right? I mean, if you like sole proprietorships and all, right? We usually like like we anyways do, but like it's not compulsory to do the accounting because people have to do the profit calculations and then pay the taxes of their own. So it's not compulsory to do, right? But then should not salary is paid to partners when they contribute to the management of the business as partners are treated as expenses. Oh, salary is paid to partners is not expense. It's part of the net profit appropriation. I told you this. Out of the net profit appropriation, there are three things: salaries to partners, interest on capital, and share of profit. So that is also false. Okay. In a written agreement, partners can agree to share profits and losses based on their capital. Yeah. In a written agreement, yes. If they don't have, only section 24 will come. When there is a change in the ownership of a partnership, its goodwill is estimated. Yes, correct. Goodwill happens when it comes to that. So the answer is C and D. Second one is the answer. Okay. That was easy, as long as you know section 24 and section 42. That was actually easy. Okay. Let's go to the next one. Use the following information to answer questions number 15 and 16. Meena and Radha is what they have given. So once again, don't waste time. The moment you see this, directly go to this. But Metana, look at this. They have said, so they have told conditions of partnership carried by Meena and Radha, profit or loss sharing ratio is there, 3:2. They have given us the credit balance of only the current account. They haven't really given anything about the capital account actually. So then this is technically, if you think about it, should be easier because we don't have to worry about anything on the current capital account. So just draw only the current account. Current account for two people. So we have Meena Radha. Meena Radha. Current account. Debit. That. Okay. And then let's quickly record. See it one by one. What have they given? Condition of the partnership is profit sharing ratio is 3:2. Okay. Both are given annual salary. So BBF also will be there. Partner salary also will be there. What is the partner salary? 450 is there. 350 is there. Agala enter that. Is the BBF given? Yeah. But what is the year end? 31st of March 2020 is the year end. Which means 31st of March 2020, 2019 should be the year beginning. So maybe in 250, 200, both are given. So this is 250, this is 200. And then closing BBF is also there. Plus another that also they have given 600, 480. So 600, 480. Nice. Good. Now it will be a easy back calculation. Good. We can be very happy when they give us opening BBF and closing BBF because then the back calculation becomes easier. Okay. All right. Next, what have they given? Salary is paid. Partner salary is 450, 350, but they have also paid the salary. So whenever they are paying a salary, it's like a drawing. Think of it like a drawing. Drawings of TNM. That's goods drawn here. Drawings is also there. Paid salary is also there. Both have to be debited because it's like drawings end of the day, right? We are paying them the salary. So 100, 120. This is the drawings. 300 and 200 is the salary. Okay. So far, so good. Annual interest of 50,000 payable to Radha has been credited. Oh, so there's a loan interest also. Who is getting? Meena is not getting, Radha is getting 50. Annual, no? 50. That. They're asking for the profit of the partnership, and then they're asking for the total profit to Radha. Now comes that question. First, let's balance this. We need to calculate share of profit. No, first and foremost, there's no interest on capital. Let's calculate share of profit. How do we calculate share of profit? If we know the BBF, what do we know? We know BCD, 600, 480. If we know the BCD on this side, what do we know? We can calculate the total, 1,008. So if we know that, this also we can equal. This is 1,000, this is 800, so this is the calculation. Done. This is basically equal to debit side. And we have back calculated. So how much is the share of profit? 1,000 minus 450 minus 250. 300 and 200. This is back calculation. Check if they have given us share of profits. Yeah, maybe any profit or loss sharing ratio is 3:2. So you can double check whether this tallies. Yes, back calculated and tallies with 3:2. Okay, no. So then our back calculation is also correct. If that is wrong only, it'll show it's wrong. But it tallies no. So that means so far we are correct. What should we do now? What are they asking? What is the first question? First question is question number 15. They are saying calculate the total profit. Yeah. What is the formula? Total profit is equal to share of profits or salary plus interest on capital plus share of profit. All three has to come. Partner salary. So Nitana, obviously we don't have interest on capital. I already explained this to you. See, directly that testing it again. So how much is the partner salary? Should we take, so total profit is equal to, should we take the paid salary or the total salary? Obviously total salary or the paid salary. Obviously total salary. Paid amount is whatever we are paid then, but there the total is there. Accrual concept, remember. So we have to take the total salary. 450 plus 350 is the total salary. There is no interest on capital, so you can leave that. Share of profit is 300 plus 2. So how much is the total then? Total is equal to 500 plus, then 450, 700, 700, 800, 800 plus 500. So answer is 1,003. That's the total. So the answer should be the fourth one. It's there, right? Here 1,003 is there. Easy. And what about the next one? Question number 16. They're asking total profit to Radha. Total profit to Radha. Again, that also you have to take salary and salary plus share of profit both. How much is that? Salary to Radha was 350. 200 was the share of profit. So which means total is equal to 550. Answer is 550. Answer is the fourth one. So both are fourth one. Okay. Why didn't I calculate the interest also? Because that is not profit. Okay. Profit is only these three. Don't forget that. This formula is one of the most important formulas that you are going to use when it comes to partnerships MCQs. Don't forget this. Again and again it comes, again and again, shamelessly it comes, as you can see. You can take a screenshot of this. But now that you have done at least, 4 or 5 questions more or less, you can see that it's a shameless repeat telecast of pretty much the same principles that get tested again and again. They give you a back calculation to do. Okay. And if they give us BBF opening and closing, then that's even better because then we can back calculate. But there are 1 or 2 patterns. It's not that there isn't. In the past year, previous year, this one of course was easy, I think. Previous year there was 1 or 2 bad traps. So like that, there can be 1 or 2 bad traps. But end of the day, the process is the same, right? And the principles of calculating the goodwill and the principle of calculating the total profit is more or less the same. As long as you can remember that, it's actually a walk in the park, right? So especially the 2020 question was actually very straightforward. Okay, so let's try 2021, right? Let's move on to the 2021 question. 2021. Let's do that. Let me bring the questions here. So the first one again is a theoretical question. You can go through and see if you can answer it. The next one is a calculation question. And then the third one, the next one after that. So there's calculation questions as well. And then there's a theoretical question as well. Check the theoretical question, look at the answers. There's A, there's B, there's C, there's D. Which of the following is correct when it comes to section 24? Nice. Okay. Partners are entitled to an annual interest of 5% on the loans provided by them to the partnership. Yes. That is what? That is actually what? Section 24 says that if they gave a loan, you have to pay 5%. That's correct. Partners are entitled to an annual interest of 5%. Annual interest of 5% when the amount payable on retirement is outstanding. Now that is also correct. Partners are entitled to an annual interest of 5% when the amount payable on retirement is outstanding. But is it section 24? Huh? That is where the bad trap comes in. Is it section 24? It's not. Yes, I told you to remember from your, I told you to put a red color box around it and keep when it came to the note. Section 24 doesn't talk about it. That is section 42. That is where the bad trap is. What they said is correct, but it doesn't come under section 24. That comes under section 42. So this is also where a lot of people might have gone wrong. A bad trap. This is a bad trap. There are some students who have gone wrong there. Partners are entitled to salaries. No, they are not entitled. Nobody is entitled. If the written agreement is there, yes. Some entitlement in that. Partners are entitled for reimbursement when they pay an expense. That is there. Reimbursement of expense is there. So that's it. True, false, false, true. So A and D are correct. That means the answer is the second one. Sorry. What are they asking? Yeah, so second. A and D are true. True, false, false, true. Yes. Bring this. Question number 14. First one. Okay. That. Next. Okay, so let's try out the calculation question now. Use the following information to answer questions number 15 and 16. Amal and Saman carried out a partnership sharing profits and losses in the ratio of 3:2. Capital and current account balances are given. Malik is also there. Have they given capital current both? Yeah. So then you draw 3. You draw the T accounts in a way where all 3 are there. Okay. So we have a partner's current account for the 3 people. And we have a partner's capital account for the PP. Okay. So BBF, BBF, fill the BBFs. Do we have closing BBFs also? I don't know. When is the year ending? 31st of March 2021. So this is year beginning, 31st of March 2020. Amal and Saman, only two fellows are there at the beginning of the year. Capital account balance is 300, 200. Current account balance is 60, 50. Malik, Nani, how much is what did Malik give? Partners are not paid salaries, no interest on capital. Thank God. Less work. 31st of March. 31st of March 2021, Malik came at the last day. He was admitted as a new partner. He contributed 500,000 as capital. So he's given 500 cash. Okay. Right. 500,000 as capital. New profit and loss ratio is 3:2:1. So old ratio. Old ratio is 3:2. New ratio is 3:2:1. Fine. Net profit of the partnership. So net profit was 150,000, the total. Here, of course, I think we can directly split it. No, we can just say share of profit because they have told no interest on capital, no salary. So we don't have to bother. Total is what? So what is the share of profit? Now, anyway, Malik doesn't get no because he joined at the last no. So obviously only Amal and Saman are going to get 3:2 is the ratio. 3:2. 3:2 of the total profit is they're saying 150. So 3:2 means 3 plus 2 is 5. 150 divided by 5 is 30. So 30 multiplied by 3 is 90. 30 multiplied by 2 is 60. That is the share of profit. Calculate. Okay. You have to be fast in this. You have to be fast in this. You have to memorize this. There's no choice. If there's nothing to memorize, logical thing, but if you're slow in it, memorize. Until 3:2 means 3 plus 2 is 5. No. So 150 divided by 5 is 30. So 30 multiplied by 3 is 90. 30 multiplied by 2 is 60. You have to become fast in that. There's no option. Okay. You can't waste time doing that calculation in your head or your calculator. You have to do it in your head. Do it faster. Calculator is okay, but that's a waste of time. So 150 is done, 500 is done. We recorded that. New profit ratio is 3:2:1. Net profit is 150, that is done. Goodwill is adjusted to capital account. No drawings. That's it. Capital account balance after adjusting the goodwill and Malik's contribution to capital, they've given the closing balances. The BBF here, this BBF they have given 330, 220 and 450. Good. That's good. If they give this, what do we know? We know BCD. Taggala than BCD. Taggala 330, 220, 450. They made our life easier. So we know BCD now. We know the BBS, therefore we know BCD. Now, what is the only adjustment that comes here? Good. Goodwill is the only adjustment that comes here. Goodwill. Yes. Okay, good to go. So they're asking for goodwill also. Now you back calculate. So now think now. Here. Debit on the new ratio, credit on the old ratio. Done. This is debit, this is credit. Debit on the new ratio and credit on the old ratio. Now 3:2:1 is the new ratio. Now how do we find the goodwill here? See. How? Now we know this is 330, 220, 450. We know this is also 330, 220, 450. Okay, fine. Any way in which we can somehow calculate the goodwill by back calculating something. Technically, what we can say is old ratio is the credit. No. So anyway, Amal will have, Saman will have. Same thing we did in 2017 or something. The repeat telecast. Amal has, Saman has. Malik doesn't have, obviously, because that's the old ratio. So if there is nothing there, we know that this is going to be 500. For sure, we know this total is going to be 500 because there's nothing there. So that's the link there. Credit on the old ratio means we know Amal and Saman will have, but we know Malik won't have, which means Malik's total has to be 500. If that is 500 on that side, this side also has to be 500. Yes or no? Yeah. So this is the same thing we did in 2000, I guess 17 or something. Same method we followed. They are also shamelessly repeating it. You are also shamelessly getting it wrong if you don't do it properly. So question number 15. Answer is Malik's total on credit side is 500. This should also be equal to debit side. Same thing. So hence Malik's goodwill is, if this is 500, if the BCD is 450, how much is goodwill? 50. This is back calculated. So now what is the new ratio? 3:2:1 is the new ratio. Right? This is the new ratio. So then we know that, but 1 divided by 6 is equal to 50, which means total goodwill is equal to 50 multiplied by 6. 300. Total goodwill is 300. So the answer is 300. So Mitana, the answer should be third one. What is the estimated? Question number 15, answer is third. Easy. So 3:2:1 means this is 2 kn, this is 100, and this is 3 kn, this is 150, 100 and 300. What is the next question? What is the equity of the business? So equity means we have to calculate everything. Fine. And they're asking what is Amal's current account balance? 60 plus 90 is 150. So if this is 150, then this side also should be 150. Which means BCD should be 150, which means BBF also is 150. So question number 16. Amal's current account balance is how much? 150. That is easy. The total of his column because there were no drawings, no. But what is the other one they're asking? They're asking for equity of the business. Equity of business, if you want, you have to take the both sides. So you have to take the current total and the capital total of all three people, Amal, Saman, and Malik. Very multicultural society. Right? That's good. Represents Sri Lanka. And I guess. So Amal's current is what? 150. Miyagi current is 110. No. Malik doesn't have anything. 0. Totally 0. So 110 and 0. So total here has to be 260. Capital is 330,220,450. So the answer is 1,260. So 1,260 is the total. Amal's current account balance is 150. So the answer is the fifth one. 1,260 and 150. The question number 16. That was easy, no? That was a repeat telecast of 2017, I think. I told you, right? 2017, I said when we did it, will be hard. But when you did it again, it's not. I told that at the beginning of the videos, itself I said, you might not understand it now, but like the more you do it, the later you go, you will get it. This is a repeat telecast. I can't remember if it was 17 or 18, but a repeat telecast of that. Exact same thing, more or less, slightly different. That's all. But the main thing was this part. Amal and Saman will have, Malik won't have. Therefore, we know the total. Crazy, though. But that's it. So, end of the day, what matters is, I can take a screenshot of this note as well. We're done with 2021. End of the day, what matters is, as far as partnership is concerned, you have to do it again and again, right? Whenever you're studying for exams, or you're studying for the final exam, and then when you're studying for like sports, whatever it is you're studying for, you just have to sit down, allocate some time, do all of these questions again on your own. Then, to be honest, you'll get it. And then no matter what question comes, you know the process. It's just a matter of following that same process. Now, even if this is question 2 from tape, even if this is from paper 2, the process is more or less the same. It's just that there'll be more adjustments to do. And then you have to do a income statement. There's no time to do an income statement, SPL. So they are the last people to do an SPL as well. So you have to do it. MCQ is actually fun, especially when it comes to partnerships. So this video ends here. It's 2021. Next video will start on the 2022 part onwards. Beyond that. Okay, so we'll end it here. Alright, so we have done 6 years, I guess. I'm falling sick again, as always. So what we have to do is 22, 23, 24. I'm going to give you time to do that. Finish off 22, 23, 24 as homework for you. And then in the next, we'll have another session on partnership as part of recap. There we will probably tell me if you need me to do it. It's the same thing, to be honest, but tell me if you need me to do it, I can do it. But we'll look at some of the paper 2 questions. From 16, we will do at least till 21, 22. And we'll see if, we can basically handle that as well. Then with that, partnerships will finish. And then we'll do the same thing for subscriptions, chapter 8. And then we'll try to do that for chapter 4. Right? But see, guys, end of the day, all what matters is, okay, be very thorough in past papers. Just be very thorough in past papers. If you're not thorough in past papers, again, do it again and again and again until you're ready, because that's your aim. Being very good at model papers is your 90 marks end of the day. But being very thorough in past papers is your aim. There are enough and more students in the past batches. Past papers is vitarak karala, they took A. Worst case, it was a B. But you have to be very thorough in past papers. Right? You have to have at least done it 3-4 times on your own. Where when you see the question, you know, okay, this is the question. If you've done that, good. If you haven't done that, you have 3 weeks, 4 weeks, whatever, 3 weeks, I guess. You can correct. Right? Don't wait until I do it. You do it. So next we will move to the subscription MCQs. And then after that, we'll come to one by one. In the next few days, back to back, there'll be classes. Tomorrow, day after is back to back weekend, so I don't think I can have the Monday onwards, Monday, Tuesday, like that, back to back we will put, and we will finish off everything. Don't worry, we will try to finish off all the MCQ rounds we will do. Okay. And your marks, your paper 2 marks also will be marked. I was unable to upload the schemes. I will do that. That's the highest priority, that schemes right now. I'll upload it. Marking will go on. Before, I think by next week, you all will get the marks for whatever we have done so far. Chapter part 1, anyways, we gave. Part 2 also we will. Look at your marks, but don't worry too much about the model papers. Model papers are always harder. If you're very good in model papers, it means you're at a 90 mark. Model papers are always harder. But past papers, tanni mari. In Tamil, we say, no, tanni mari ikyon. Past papers, tanni mari ikyon. Right? Karachi, tannila karachi kudikiradhu kiyala they say in Tamil. Right? That past papers has to be done. If you're not there yet, please do it. You have 2 weeks, more than enough. Just get it done. Finish 1 round, finish 2 rounds, finish 3 rounds. To be honest, automatically your scores will come up. Okay. So I'll see you all on Monday. Just keep an eye on my messages. Next will be subscriptions. Like that. We will go on one by one and finish. Okay. I'll see you all soon. Take care, guys. Bye-bye.